Hey guys, Steve here with the strategy session for Monday, August 25th, 2014. Hope you guys had a great day. Unfortunately, I was not able to watch the market intraday. For those of you that don't know, I actually have a full-time job. I'm a landscape architect, so I had some meetings and stuff today. So this is actually the first time I'm going to be looking at the market. I know basically where we finished and how well the portfolio performed. But I haven't looked at each individual stock today, so that's what we're going to do together right now. And again, this is, as one of the reasons I like trend following is you don't have to necessarily be involved all day. You can take your signals at the close when the market's obviously closed and you're thinking rationally. So let's get right into it. As far as the S&P, we basically touched 2000 today. 1999.75, one tick away from 2000, and then we kind of pulled back, which is expected, I would think. Nice round number like 2000 on the S&P. Why wouldn't you take profits there, type of thing? It's a good target for people that trade that kind of system. So, again, I think I would really like to see some consolidation at this point, especially the next week or so, just to provide a little bit of a base moving forward, place that we could use as a reference, I guess. So the NQs, the Nasdaq continued its strong performance. Again, this one touched let's see, the high today was 4,078.50. So again, nice move higher, basically closed in the middle of the range. And the Dow, I think, actually almost broke out today. Again, the Dow was high of 17,103. So, again, definitely short-term traders in control. I think we're using definitely some obvious price targets to take some profits. As far as our portfolio is concerned, I have to apologize. I don't even think the last 3 or 4 times we've done the strategy session that I've touched on General Dynamics. That was a trade that we entered here on this breakout on the 20th. And I don't think I've covered it since. So that's my fault. It wasn't in my list. I'm long it personally, as well as, in the model portfolio. So, real quick on General Dynamics, we'll touch on that one first since we haven't in the past. It's really just moved sideways since we entered. Nice breakout bar, nice setup here. All right, we had 2 touches of this 14 or 114.50 area, so definite, easily identifiable stop. If you look at the weekly chart, we've been trending up nicely. We came in and touched the weekly trend line and are now bouncing off of that. So this is one of those that you kind of just sit on hands, let it work. There's nothing to do at this point. The position's only 3 days old. So, for right now, just let it work. No reason to do anything further. Okay, now Apple. Apple basically went up and touched the high today was 102.17. So 102 area, and closed a little bit lower than the open. So hence this solid green box. As opposed to these open green boxes that we've had. So maybe some profit taking there, but again, Apple right now, our stop is still 94.29. We have to at some point redefine this trend line, and whether that's something along those lines or something through here, I haven't really determined that yet. Just because we don't have really many references to go off of. There's only come down to the 50-day moving average once. Maybe if we redraw this as a channel, that doesn't really work either. So, right now, it's very difficult to determine where that trend line is in Apple. So I'm really using the 50-day moving average as that trend line. So for right now, like I said, 94.29 puts us below whichever trend line we decide to use, the 50-day and previous low. ADM up 0.65% today. We had this coming in and really just closed in the middle of Friday's range. Some consolidation. I think, as we discussed in the weekend update, I think we're gonna consolidate here between this $48 and $50 level. But But for right now, again, not much to do. Stop is down here, 46.30. AMT, another strong day. This is one of our largest positions. I think this and Disney make up our largest positions. But as we talked about in the weekend update, I would think we would consolidate between this 96.50 and the $100 level before we decide to make a break either direction. If you look at the weekly chart, we're kind of on this accelerated trend line. There's also the more shallow trend line here, which is the lower line. And, so I think for us right now, stop is 92. Eventually, I would like to move it to 94, just about 94. But we just need a couple more, maybe another week or so, to allow that 50-day moving average to get above 94. So it provides another support area for us. APD, really just moving sideways over the last few weeks since we entered. We entered on this nice big bar here from earnings. And since that time, we've really just moved sideways. I think from, if you look at the weekly chart, it looks to me as though it wants to essentially just move sideways and touch this weekly trend line, which would basically coincide with the 50-day moving average. So again, for right now, it's really just a wait and see. We're at 128.65 as our stop level. This could be the formation of a lower high, and then if that's the case, and we broke 131, then that would be confirmed as a lower high and eventually a lower low. But for right now, we're still using this 128.50 as our stop. Disney, we had a little bit of a pullback today from where it opened. We opened and touched 91.15. We opened at 91, so essentially we opened at the highs, and we just had some selling pressure. I don't foresee this not hitting $100. Usually stocks that make it to 90 will make it to 100. But for right now, we're managing our stop and managing our position with the $85 stop. EQR down a little bit. Really just coming in, testing the top of this recent consolidation. For right now, again, 64.08 is our stop. And this is just another let it work. There's no reason that we have to be involved. There's no reason that we have to try and raise stops at this point. Just let the stocks work. The market is trending in our favor. So just kind of get on and enjoy the ride. Expedia. This one broke out from this little range it was in last week. Basically closed and opened really right near the highs of the day. It came back and tested a little bit of that recent consolidation. I still think right now 79.32 is the proper stop level. Eventually, I would like to move it to 82.50 once we can get this 50-day moving average over that level. So again, it provides another reference for our trend line and for our stops. But for right now, it looks like we collected a dividend, or it went ex-dividend today. So, again, I'll take a look at the paper account for Thinkorswim, but I don't think it monitors the dividend payments. Fidelity. This one, again, basically on, what day is that? Friday, came back, tested those highs from the consolidation. Now it looks like it's, maybe either consolidating above that level or ready to move higher. But if we look at the weekly chart, here's a nice trend line higher. We moved in. We had a nice tight squeeze and consolidation on the weekly. Got a little breakout. Came back, tested that trend line, and are now starting to move higher. So I think for right now, 54.86, great reference for our stop. And, again, just let it work. H&R Block moving sideways. This is a little bit more selling. This could be a reversal signal here. The fact that we basically engulfed the body of the previous candle. But if you look at these, the tails, we're basically in sideways consolidation. These three bars are for lack of a better term, they're consolidation. Today was more of a reversal signal that we opened at the highs and basically closed near the lows. But if you look at it from a general perspective, we're right at resistance on the weekly chart, right through here, this 33.50. And right now, on the daily chart, the last 3 bars have just been sideways. So that's another form of consolidation. We did move our stop to 32, and it looks like we have earnings coming up on the 3rd and a ex-dividend on the 5th. LUV, up again, another almost percent today. Was up more earlier. But again, this one has just continued to move higher since we've entered. If you look at the weekly chart, it's had a nice move off of that trend line. For right now, our stop is still 27.70. 27.50. Should move this down a little just to prevent any confusion to our arrow. Okay. So 27.50. Again, this has moved up so far, so fast. There's really no other reference for a stop. Look at how far extended we are from the 50-day moving average. I really think that at some point this really needs to consolidate between, say, this current level and maybe the $30 level or $31 level. Move sideways like it did here and here and here, and allow that 50-day and that trend line to come up and support it. Because at this point, there's really no air or no price and all air in between here as far as any reference for a stop. You could essentially, if you were long options or long this for a quick trade, you could essentially trail your stops to the previous close or the previous low, and right now have your stop, say, down here at 31.25, or even if you want it to be as close as 31.79. That's not the way we trade. We want to be in these stocks a little longer term. So for right now, I can't really move my stop. RSG, Republic Services, again, another one that's really taken off since we've entered. Not really much consolidation that offers another stop level. We did move our stop to this 37.50 over the weekend update, which represents this small consolidation in here from, 7.29 to 8.7. But for right now, again, there's not much to do. Eventually, we can use the top of this consolidation as a reference for stop. I'd rather use a low. I'm not too fond of using highs as stop levels, because I've always found that it comes back and penetrates the high just a little bit and then it turns around. So I would rather use the low. But again, there's really no reference for any stop at this point. So our stop is going to remain 37.50. And the last one, Tesoro. We talked about over the weekend that this bar not being 100% accurate. I don't think it ever traded down to 61. Nonetheless, we're basically right at the highs. We're going to be testing the 65.75 level pretty soon. But I think for right now, a reference for a stop is 59.08. The next reference I see would actually be this 61.75 level, which would be this low through here. But we need to see the 50-day moving average kind of catch up a little bit. So let's take a quick look at our weekly watch list. Again, if you haven't followed along, we develop this every weekend on Saturdays in the weekend update. New list every week. And we use that for the basis of our trading moving forward. We discussed how this list is, for the most part, probably the smallest it's been since I've started the blog. For the simple reason that the portfolio really doesn't have a lot of room for any new positions. So, these are really just put on for anybody that wants to follow along that isn't actually following along with the model portfolio, and just for your reference. So, APC really testing those highs. We talked about a close over that 112 area, 112.50 to be exact, as a great entry, and then setting your stop down here at 104.86 on the weekly chart. Great looking setup, a consolidation into another consolidation, basically blue sky territory ahead. So a close over that 112.50 would be a great entry for APC. APA, really just in the middle of the range, not doing much. Hess was close, again, over that $100 level. This is something similar I would like to see out of AMT and RSG, how we were so extended from the 50-day and the trend line, and we had this sideways movement. I mean, yes, it's been probably about a month. You figure it started 6:30. Yeah, so just about, actually almost 2 months of sideways movement. But in the long-term trend, I think that's something that we need to see happen. Maybe not for that long, but Also, I think that definitely establishes now a nice support level that you could bring your stop up to this 97.50 if you were long previously, just because you haven't necessarily had the advance in price, but you've definitely established a support level where, if it broke, I would say the trend is probably changing. MJN still in the middle of that consolidation. Schwab, I think, broke out. Nope. I saw some tweets that it was breaking out. I wouldn't consider. Let's put it this way. Yes, it is a breakout, but it's not the type of breakout I would like to see. I would like to see this. If this were to happen, you basically look here. We basically double topped from 321 and today at this $29 level, you can call it. So if I were to see a breakout, I'd like to see a nice full open green candle towards the highs, and that would really signify a breakout with some force. In my opinion, that kind of limped out of the gate. EL, Estee Lauder, we've had this on the list for a couple weeks. Again, it is a breakout, but I would like to see a more substantial breakout to really, especially with how strong the market's been. I want to make sure I'm always entering into the strongest stocks, and I like to see nice high volume breakouts. MCK, nothing. PSX, similar to Estee Lauder. Abbott, we added on, just in the middle of that range. WDC tried, we've talked about this a couple times. It's trying to break out. It keeps hitting that 102 level and retreating. But again, this is a great looking setup. Nothing there. National Oil of Arco, we talked about this breaking out last week from this range. I think the next breakout level would have to be that 86. And if you did take it on this and you took a half position, you would be waiting for 86 to break out to fill out that position. DPS, no. VFC, that's moving. Let's see. Yep, that's a breakout as far as I'm concerned. Again, we're not going to be taking it just because of where the portfolio is. But if you were to take VFC, you could either set your stop here at 61.50 or be a little more conservative and set it down here at 60.50. JWN, it's had a nice strong move back towards the highs of that consolidation. That's really it, guys. And again, we talked about HD, Home Depot, just looking at that breakout from the weekly, okay? So again, this is now, if you missed the weekend update, basically the reason HD is on this list is I've seen these patterns on the weekly chart lead to some substantial gains, and HD is nowhere near a good entry point. Don't get me wrong, this is I'd like to either see this come back down and maybe consolidate between 92 and 86 or do something along there. HD is on our list solely for the reason that we don't miss it. Because we basically talked about this move from 2011 to 2013, is almost a 200% move. It went from 34 to 75, so a little bit more than a 200% move. But I think we're at that point where this could provide some substantial returns. And, in a year, we could be looking back at Home Depot when it's in the 150s or 160s and saying, oh, you know what? That breakout from $82 really was a great start to that run. So that's why HD is on our list. Again, we need to see something on the daily, some kind of consolidation. I would never enter a position right here, only for the reason that I have no reference for a stop. My stop level would either be down here at 79 or this gap level. So again, distance from where we are now to a stop level would be way too much to provide any type of substantial position. But if your plan is that, you know what, I'm going to buy some here and I want to, set my stop down here at 79, so be it. But just enough room that if it came back down to 82 and consolidated and started breaking out, that you would be able to add to that position. I wouldn't put a full position on right now. So that's really it for tonight. I think we touched on everything. Again, market looks strong. We're basically right at that 2,000 level. We touched it today, as far as I'm concerned. We're about to tick off on the S&P 500 futures. So let's see what tomorrow brings. But the market's been strong. So, I know my commentary has been the same for probably the last week, but just let the stocks work, guys. That's the whole point of trend following is, we're just following the trend. We're along for the ride. We're not smarter than the next guy, but we also will stay in the position. We're not going to get at the top. We're not going to get in at the bottom. But if we can pick up that 60% move in between, that will provide some nice returns for the year and some substantial portfolio performance in my book. So with that said, if you haven't already, please follow me on StockTwits, Twitter, Google+. Subscribe to the YouTube channel. You can also subscribe to the nightly recap if you go to the website, theturtlefollower.com. And basically, I will email a newsletter out with all the links to the videos. If you didn't already, please watch the Stock Market Outlook video tonight or from this morning. And tomorrow will be a new trade school video. And we're basically going to be going over the difference between support, resistance, and consolidation. We're trying to build one week on the other, and really take you from not knowing anything about stock trading, which is perfectly fine, to giving you the basics you need to make your first trade and kind of dip your toe in the water. So if you have any questions or comments, please leave them in the comment section below. Hit that like button, and we will see you tomorrow for the trade school video. Have a great night, guys.